Recently, I got a DM from someone on my Instagram. The person is a father in his 50s, stays in an HDB flat with 53 years of lease left, and currently rents out his flat for a decent sum of $3,000 income per month. But he is now thinking of how he could pass this HDB to his kids after he passes on while retaining as much value as possible. Because here's the issue. Since HDB flats have a 99-year lease, the flat's lease value will fall as the lease decay sets in. Our minister has also made it clear that when the lease runs out after 99 years, most HDB flats will have to be returned back to the government. And we should not assume that all old HDB flats will be eligible for en bloc. I think this is something which many Singaporeans would eventually encounter. That's why in this video, we'll be exploring what you can do with your old HDB flat as you get older in order to unlock as much value from it as possible. But before I start, do join my Telegram chat group to discuss or ask any questions that you may have. And with that being said, let's jump right in. Method number 1. Downgrade to a smaller and newer resale home. For simplicity's sake, let's assume that this is a 4-room flat in a non-mature estate, since he gets to collect a monthly rental of $3,000. And to recap, this flat has 53 years of lease remaining. Looking at similar HDBs on PropertyGuru, his flat could be sold for around 420k to 490k, based on 4-room flats in non-mature estates. If he buys a newer 3-room resale flat in a non-mature estate with at least 85 years of lease left, this will cost around 420k to 480k at locations such as Woodlands, Sembawang, Bukit Panjang, Bukit Batok, Jurong West, and Yishun. So, given that both price ranges are similar, it is possible for him to change homes with minimal cash outlay. Though, there will still be additional costs such as stamp duties and other fees for resale transactions. Besides that, there are also other benefits to this method. Firstly, since it's another resale flat, the transaction can be completed in just a few months, and you do not have to wait long to move into a new flat, unlike a BTO. Secondly, you have the flexibility to choose the home that you want. But more importantly, you may be eligible to benefit from the Silver Housing Bonus Scheme. Basically, if you are downgrading your current HDB flat to a 3-room or smaller flat and top up your CPF RA with the sales proceeds of up to 60k, your household can receive up to 30k in cold hard cash. And why is this good? 1. Topping up your CPF RA will give you a higher payout when you turn 65. At the same time, the cash payout will also give you some flexibility to do what you want. You can either spend it, save it, invest it, or even use it to top up your CPF RA up to the enhanced retirement sum in order to get higher payouts. Quick pause. With home loans being one of your biggest expenses ever, you should always get the best home loan to save as much money as possible. And here's where PropertyGuru Finance can help. PropertyGuru Finance is an online mortgage marketplace that automates and simplifies the key stages in your home journey. You will not only be able to find the best mortgage rates in town, but also receive free mortgage consultation and apply for mortgage fully online from the comforts of your home. At the qualification stage, you can estimate the amount of home loan you can borrow using the pre-qualification tool that simplifies bank rules and government regulations into an online assessment. You will then receive a pre-qualification report stating the maximum home loan amounts that you are eligible for, based on your unique financial situation. This report can help you narrow down your property options and even secure faster viewings with agents, as it demonstrates your pre-approved mortgage eligibility. Besides that, you will also get to compare the latest rates from 13 major banks in Singapore, while also seeing the monthly installment breakdown and the key benefits of each package. And once you are ready, you'll be able to apply for an IPA letter online in just a few clicks and continue on with your digital mortgage application. What I really like about PropertyGuru Finance is that they combine the technology together with human wisdom. So if you ever need help, you can talk to their in-house mortgage experts who will give you unbiased, tailored financial advice and help you solve all your mortgage needs. And the best part, all their services and online tools are all free with no hidden fees. So if you are looking for a new home loan or looking to refinance your existing loan or are just curious about your loan eligibility, you can check out PropertyGuru Finance. And with that being said, let's get back to the video. Besides selling your HDB and moving to a resale flat, the second option is of course apply for a brand new BTO flat. This will completely solve the issue of lease decay since the lease gets reset back to 99 years and the kids would inherit a flat with substantial years of lease left. They can then continue to rent out the flat for more years to come or just sell it off at a good market value. As a bonus, you will get to unlock even higher value by downsizing to a 3-room BTO flat. For example, looking at the BTO launches in 2023, the prices of 3-room BTO flats in non-mature estates would range from 200k to 350k. This means that you will get to unlock anywhere from 150k to 200k worth of value when you move over to a BTO. Quada! But what are the downsides? First, the odds of getting a BTO are slim, as HDB will consider you as a second timer if you had taken a housing subsidy before, aka bought a flat directly from HDB or bought a resale flat with CPF housing grant. The BTO flat supply set aside for second timers is only up to 15%, whether you apply in a non-mature or mature estate. Since the government priority is for first timers to get their homes and hey show, start a family. And if you currently own a private property, this step is even trickier, as you will need to sell off your private property first and wait for at least 30 months before you can apply. And even if you get to apply, your queue number may be bad, and you will end up being unable to pick the best unit. On top of that, new BTO flats also require time to build. Currently, the waiting time is up to 4 years. So if you are in a hurry to move over, this may not be feasible. Though, if you do successfully manage to secure a BTO flat with a fresh 99-year lease, congratulations. But before you get too excited, do remember to set aside some money to pay the HDB resale levy, yeah?
Wait, what levy?
Basically, if you sell off a subsidized HDB flat to buy another subsidized HDB flat, you will need to pay a HDB resale levy. The resale levy depends on the type of flat you are about to sell off. For example, if you are selling off a 4-room flat, the levy would cost 40k and the levy can only be paid in cash. However, even with that levy, you will still be able to profit anywhere between 110k to 160k while getting a new flat with a fresh 99-year lease. Though, this method would require you to jump through various hoops and have very good luck in order to land with a good outcome. Moving on, the third option is doing something called a lease buyback scheme. This option will allow you to continue living in your current home while at the same time unlocking the value of your home plus a bit of cash bonus of up to 30k. The duration of the lease retained will determine the net proceeds that you can receive.
Wow, it sounds like a good deal there.
But wait, there's a catch. There's always a catch. The first catch is that all owners need to be at least 65 years old in order to do this. Second, this only applies to HDB flats and excludes short lease flats, HUDC, and executive condominiums. Furthermore, the monthly household income must not exceed 14k and you cannot own any other property. Then, in the unfortunate event that the flat owner passes away within the remaining lease period, you have two options. One, the surviving spouse or child living in the flat can continue staying there for the balance of the lease period. Or two, the flat can be returned to HDB. By terminating the lease early, HDB will reimburse the remaining value of the lease to your beneficiaries. Under the lease buyback scheme, depending on the age of the youngest owner, you can choose to sell up to 35 years of your lease to HDB. For example, if you and your spouse are 65 years old, you will need to retain at least 30 years of lease. And depending on the flat type, you will receive a different amount of cash bonus. However, in order to receive this cash bonus, you will need to top up your CPF RA with the unlocked proceeds and can only pocket any excess cash that's left over after the top up. That's why this is a rather unpopular scheme. According to Straits Times, there were only about 2,860 seniors who tapped on both the lease buyback scheme and silver housing bonus in 2022. And even though the take-up rate has been steadily increasing over the past few years, these numbers are still a fraction of all the seniors living in HDB flats out there. The last option is to downsize to a 2-room flexi flat. The government introduced this scheme in 2015 to allow retirees to better monetize their existing homes for retirement, rather than be asset rich but cash poor. The reason it's called flexi flat is because these flats offer flexible short leases ranging from 15 years to 40 years in increments of 5 years. Then, if buyers no longer wish to live in their flat or have passed away, the flat will need to be returned back to HDB. HDB will then pay out a prorated sum of the remaining lease to the buyers or their next of kin. So let's say you are 55 years old now and you opt for 40 years lease flexi flat. In that case, the base price before any grants and payable will come out to be around 63k. So assuming you sell a current 4-room flat for 400k to 500k and have to fork out 63k for the new flexi flat, plus a 15k HDB resale levy, you'll be left with a whopping 300k from the sales proceeds. After that, how can you optimize the funds? It's the same story all over again. First, some of the sales proceeds would be deposited into your CPF OA. In that case, you can consider investing the money into T-bills or approved ETFs in order to get a higher return. Second, you can top up cash proceeds into your CPF MA up to the basic healthcare sum, since the money in MA can be used for healthcare-related expenses such as insurance premiums and hospital bills. Then, if there are excess funds, you can top up your CPF RA to reach the full retirement sum if you have yet to achieve it. Or, if you want, you can go one step further and top up your CPF RA up to the enhanced retirement sum for better payouts. But if you prefer not to top up and are risk-averse, you can invest the cash proceeds into safe investments that can deliver steady PP returns, such as fixed deposits, SSB, T-bills, or SGS bonds. Otherwise, if you prefer to invest the money in order to keep up with inflation, you can consider investing them into Singapore dividend stocks. Anyway, that was a quick analysis of what you can do with your HDB flat after the age of 55. As everyone's housing situation is different, it is best to review your current situation to see which is best suited for you. If you do manage to unlock the proceeds from your home, make sure to put those monies to good use as they are meant to pay for your retirement, yeah? Anyway, that's all for this video. Hopefully, you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.